Hey everyone, welcome back to Corporate Decoder, the place where we crack open those thick corporate filings to see if the numbers are telling the real story or just a bedtime story. Today, we're diving into Antero Resources Corporation, and let me tell you, they've been busy making some big moves, including a rather hefty acquisition. So, what is the big news on the 3rd of February 2026? Antero Resources Corporation announced they completed a massive acquisition. They bought HG Energy True Production Holdings, LLC, which we'll call HG Production for short, from HG Energy, ILC, or HG Energy. This wasn't chump change either, costing them about $2.8 billion in cash. This deal was part of a bigger plan, outlined in a membership interest purchase agreement signed back on the 5th of December of last year. Now, big acquisitions usually mean big financing, right? And Antero Resources did just that. On the same day they closed the HG production deal, the 3rd of February 2026, they entered into a credit agreement which they're calling the term loan a facility. This is essentially a big loan, and they borrowed a cool $1.5 billion. The interesting part is that this loan is not secured by any of their subsidiaries' assets, and it is set to mature on the 3rd of February 2029. The agreement also has some pretty standard financial rules, like keeping their total debt to capitalization ratio at 65% or less each quarter. Think of it as a cap on how much debt they can take on relative to their overall financial strength. They also have to follow other rules, like how they can merge with other companies, take on more debt, or pay out dividends to shareholders. It is all about keeping the company's financial house in order. The interest rate on this loan is a bit of a moving target. It is tied to something called term SOFR, or an alternate base rate, which are industry benchmarks for interest rates. Plus, there is an applicable rate that can range from 1.125% to 2.00% for term SOFR loans, depending on how well Antero Resources long. Term debt is rated by credit agencies. This means if their credit rating goes up, their interest payments could go down, and vice versa. It is a variable rate loan, so their interest costs could change over time. And just a little side note, while the acquisition was announced and agreed upon in December 2025, there was a slight adjustment made on the 22nd of December 2025. This was a first amendment to the purchase agreement, basically to tweak some of the details and restate certain parts of the original deal. It is common practice to make these small adjustments to finalize a big transaction. Now, typically, when a company makes a big acquisition like this, we'd be poring over detailed financial statements for the business they just bought, and also looking at their pro forma financial information. That is where you see how the combined company is expected to perform. However, in this particular filing, Antero Resources stated that these detailed financial statements and pro forma information will be filed later, within 71 days. So, while the deal is done, the full financial picture of its impact is still being prepared and will be disclosed soon. Let's talk about what this all means. Antero Resources just spent $2.8 billion to grow its business. This is a significant bet on the future. They are clearly aiming to expand their operations and likely their market share in the energy sector. Taking on a $1.5 billion loan to help fund this acquisition shows a willingness to use leverage to achieve strategic goals. On the one hand, this acquisition could lead to greater efficiencies and increased revenues, especially if HG Production has valuable assets that complement Antero's existing operations. It also demonstrates Antero's ambition and its ability to secure substantial financing. However, there are always risks. The energy market can be volatile, and commodity prices can swing wildly, impacting profitability. The success of this acquisition hinges on Antero's ability to effectively integrate HG Production's operations and realize the expected synergies. There is also the burden of the new debt. While they have covenants in place managing that $1.5 billion loan, especially if interest rates rise, will be crucial. We'll need to keep a close eye on their future earnings reports and see if the numbers support this bold move. For now, Antero Resources is clearly playing a long game, and this acquisition is a major step in that direction. Alright, that is our breakdown of Antero Resources Corporation's latest filing. What is your take on these numbers, and what they signal for the company's future? Do you think this acquisition will pay off? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribing ensures you don't miss our future deep dives. And hey, if you want to connect with other finance enthusiasts and get even more exclusive insights, join our Discord community. The link is in the description. Thanks for watching. See you next time.